Hello, everyone. Good morning, good afternoon, and good evening, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition of the Forex Morning Mastery, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and for the next 30 to 40 minutes, I'm going to be your host as we will be taking another fresh new perspective into the financial landscape. Well, today is Thursday, January 18th, and we are gradually heading into the second half of the week, as today will be a major factor in determining how the week is going to close when participants will be rounding off for ahead of the weekend. So we have quite some interesting insight into the market today, and of course, for those of you who are with me on both my trading view and telegram platform, you must have gotten an insight into or an idea into what we will be deliberating on today. And in fact, I'm so excited to share new ideas with us. The last 24 hours has been quite interesting, and one of the assets which happens to be the most successful asset on our watch list for this week, that is the USDJPY. Surprisingly, this is the first time we will be trading this asset in the last 5 months, and we've been able to scoop in over 800 pips with multiple buy entries on that asset. So we are going to be looking at that asset today on how we will intend to position ourselves for the next move. The US All Spot 2, though we had a stop loss hit yesterday, but price still doing very well on that particular asset, and the same thing goes with the XAUUSD. So I encourage us all to stay tuned in so we don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining me for the first time, you're highly welcome on board, and I'm very excited to have you around with us this morning. I'm very sure you will be wondering what this is all about. What is it that we really do on the Forex Morning Mastery with Sheriff Daramola? Well, first of all, it's important to note that I usually share a couple of videos during the weekend which emphasize my idea and plans ahead of the new week. So the Forex Morning Mastery was born out of the necessity to do follow-up details on these assets throughout the course of the week. So every day as technical traders, we usually gather here to engage in follow-ups and reviews of these positions ahead of both the London and the New York session. And the session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. My aim here is to equip you with the knowledge and skills necessary to make independent trading decisions. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own trading decisions, and of course make your own strategies as well. So once again, I welcome you on board and encourage you to actively engage in the comment section. So I see a couple of comments. I'm loving the energy this morning from Jonah Aruna, Ivan Gobunovas. Glad to have you around with us this morning. And of course, I can see Ronald Camille too as well. Good morning to you guys. Trust you had a good night rest and did have a profitable week so far. And let's see how we will be planning ahead of today's trading session. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiments today. And of course, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, for this week, and based on the assets on our watch list so far, we have been focusing on high impactful event from both the United States and the Japanese economic docket. Now, for today, Thursday, January 18th, we're going to be having we do not have any high impactful event today, actually. So what I did instead, so that we can at least have an idea into what are the major catalysts that is likely going to be driving the market sentiment, so I had to include the mid-tier economic features from both of these economies. And if you look at what we have on the screen right now, we have a handful of them, but we are going to be talking about the most important one that majority in the market will be looking forward to. Now, from the US economic docket, we have a speech coming in from Bostic. Bostic has been having a couple of speeches in the last 1 week, and of course is going to be saying something today. And for those who don't know, Bostic is the president and CEO of the Federal Reserve Bank of Atlanta, and he also served as a voting member of the FOMC, that is the Federal Open Market Committee. And whatever he says today is going to be giving us an insight into the monetary policy outlook of the Federal Reserve, and of course the health situation of the United States economy. Though we've been having a handful of speeches during the course of the week, which has been giving us an idea that the most anticipated interest rate cut as early as the month of March is going to be on hold right now, due to the resilient nature of the US economy, based on the data that has been churning out from that docket in recent times. So as a result of this, we still want to see what he will have to say. Definitely is going to be having an impact on the market as well. Then later on today, we will be looking forward to the initial jobless claim, another impactful event, which of course is an insight into a very sensitive sector of the United States. Now, the initial jobless claim is usually released by the by the U.S. Department of Labor, and it measures the number of people filing first-time claims for state unemployment insurance. Now, if the data here comes in larger than expected, it indicates a weakness in the U.S. labor sector, while a lower figure indicates buoyancy in that sector. Now, if we look at what the previous data says here, that is for the month of December, it came in at 202,000, sorry. And based on what is on ground right now, economists are projecting 207,000, which is a little bit higher than the previous month. So what this simply tells us is that there is an expected contraction in that sector. So we look forward to see what the actual data will be. Will it be just as expected or below expectation? Then we also have a final one from the United States, which is also a very important one, and that is the Philadelphia Fed Manufacturing Survey, another index that will be giving us an insight into a sensitive sector in the United States. And for those who don't know, the Philadelphia Fed Survey is a spread index of manufacturing conditions within the Federal Reserve Bank of Philadelphia. Now, this survey serves as an indicator of the manufacturing sector trend in that particular jurisdiction. And of course, generally speaking, an above the expectation reading will be considered to be positive for the US dollar. Now, looking at the previous data, that is for the month of December, it came in at a deficit of 10.5, and based on what is on ground right now, economists are projecting a deficit of 7, which is a little bit on the high side compared to what the previous data was saying. So We think there's going to be another data that will reflect the resilience of the United States later today. So we look forward to see what the actual data will be on that one. Then finally, we are looking forward to later in the day from the Japanese economic docket, the CPI data, which is considered another impactful event. And for those who don't know what the CPI data is, it is a measure that examines the average change in prices paid by consumers for goods and services during the last month. And a higher than expected CPI can lead to concerns about inflation impacting market sentiment, as it may prompt expectations of tighter monetary policies to control rising prices. Now, of course, if we look at what the previous data says here for the year on year, and of course the year on year excluding food and energy, we have 2.8 and 3.8% respectively, though we do not have any data to compare with to see if things are going to be coming in just as expected or beyond expectation, or even below expectation. But in this kind of situation, we are likely going to be seeing data coming maybe an hour or two before the event happens, so we can have something to compare with and see if things are doing well or not. So these are the impactful events we will be looking forward to today from both the United States and the Japanese economic docket. And one important thing as technical traders is that we understand that the anticipation of this event often affect the market sentiment, which in the long run will reflect on the chart as price action. So what we are going to be doing here today as technical traders is to sniff through the current market structure, looking out for structures and patterns that we will use to position ourselves strategically for the next move. So I encourage you to stay tuned in so you don't miss out on the valuable ideas we will be deliberating on. I see your comment, Eric Mudavadi. Good morning to you. Glad to have you around, and thank you very much for your compliments. So with that being said, we shall be diving right into the business. So as usual, the first asset we will be taking on this morning is going to be the USOILSPOT as usual. And of course, we've had a roller coasters of buys and sells during the course of this week. We had situations where we bought, we had situations where we sold at the beginning of the week, and of course we did have some couple of losses on this particular assets due to the choppy situation we witnessed in the last 24 to 48 hours in this market. But fortunately for us, we were able to capitalize on that bullish momentum that broke out of the $71.40 level during the later part of the New York session yesterday. And for the sake of those who missed out on our earlier sessions on the Forex Morning Mastery, let's quickly run through what went on in this market and what has led us to the situation we have right now. So at the beginning of the week, we had a range identified where price was initially confined within the $73 area, as you will see here, and of course the $72.40 level, to emphasize the uncertainty that gripped the market at that particular point in time. And of course, whenever we have this kind of structure identified on our chart, we do exercise patience and wait for either price breaking out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And surprisingly, despite all the fundamental factors we talked about, we saw price drop to the downside, breaking down the support line for the first time, giving us our first sell position for the week. And in fact, we saw price move over 100 pips thereabout, and in fact we had two positions on that one before the bullish momentum came in. And of course, with our stop losses in place, we got taken out with a reasonable amount of profit. And on Tuesday, we were looking out for buying opportunity. As you all know, we had this descending trend line as a yardstick to guide our trading decision at the beginning of the week, where we were saying if price continues to trade below the descending trend line, we look out for more selling opportunities. And if price breaks out of the trend line, we want to be buying that asset. We did bought the asset actually. We had a couple of buy positions. The first one wasn't break even, but the second one went into a loss on that one, recording our first loss trade for the week on the USOILSPOT. Then we had the privilege of joining a bearish move. Remember, price breaking down the descending trend line. And during the New York session yesterday, for those of you who are with me on both my TradingView and Telegram platform, I did give an update that we will be monitoring how price will react to this range between the $71.40 level and the $70.72 area. And of course, I did mention that we either look out for the breakout of the $71.40 to buy, or the breakdown of the $70.72 to join the downtrend continuation. And remember, we already moved our stop losses on that sell position yesterday. Now we saw price break down the support line here, triggered a sell position for us all. Unfortunately, that one went into a loss on that one. And one interesting thing about this whole structure is that we were actually technically not in a loss, as this loss here was actually took out the profit we had made so far this week. And of course, following that, we saw price break out of the resistance line of that range to trigger the buy position. And interestingly, the resistance line here shares a beautiful confluence with the descending trend line. So the breakout of the descending trend line coincidentally happened when price also broke out of the $71.40 area. So we had our buy position triggered, and since then we have been adding more buy positions to our existing trade. We also added one more, had the $72.40 level, and then finally this morning we had another one, had the $73 area. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby on this move. Now, as it is right now, we want to be moving our stop losses right now to secure the current buy positions, as we never can tell due to the uncertainty that has gripped the behind the scenes. We will definitely need to lock in some profit, because anything could happen at this point. And if you would ask me, anywhere above the second entry seems most appropriate to lock our profit. And remember that we always want to give enough breathing space for price action to move around. So anywhere around here seems most appropriate. Secure your positions around this area, and while we continue to look out for more opportunities on the USOILSPOT. I hope you've done that right away. Please do move your stop losses accordingly, secure your positions, and let's see what is going to happen from here. Now, with a well secured position at this juncture, what is going to be our plans for today? How do we intend to manage this position here? How are we going to continue buying this asset, or are there chances that sellers could come in at any point to drive price to the downside? Well, before we go into the technical details, it's very important that we also understand the fundamental factors that is actually driving this upward trajectory in price action in the last 24 hours. Now, the recent upward trajectory in the crude oil market has been fueled by optimistic sentiment stemming from the OPEC Plus recent report, which was showcased yesterday. And at that point, they did mention that the monthly report foresees that there is going to be a robust growth in oil demand for 2024 and 2025, predicting a 2.25 million barrels per day increase in 2024 and a 1.85 million barrels per day rise in 2025. This is a very positive report actually, but I personally don't buy into this report. Reason simply because they could easily manipulate these figures to make a high demand for oil prices. And of course, we saw how the market participant had reacted positively to this report. Now, at this point, we begin to see a little bit of choppy situations, as throughout the Asian session, the momentum wasn't as emphatic as what we saw during the New York session yesterday, giving me signs that we might be seeing some limiting factor to that upward trajectory. However, we should not also forget the geopolitical tensions, ongoing supply disruptions in the Red Sea, which is of course acting as a deterrent to the significant decline we saw since in the last couple of weeks in this market. And as a result of this disruption, this has led to many companies, vessels, to reroute their cargoes around Africa, resulting in prolonged journey and of course increased cost of operation and cost of transportation too as well, which will dovetail to high cost of product. Now, in response to this, we have been witnessing some attacks on the Houthi based in the last 3 to 4 days, and in fact yesterday too, while I was listening to the news, I saw that there was another attack again on the Yemen supported Houthi yesterday too as well. And of course, these people are saying that they will continue to attack vessels as long as they want. And yesterday they also attacked a U.S. vessel, a U.S. cargo too, yesterday too. So things are not looking rosy in that area, and the concerns of oil disruption is very, very high at this point, hereby supporting the idea of demand. But other factors in this market too are also in play. Now, looking at yesterday and adding a layer of complexity to what we witnessed here, we saw the American Petroleum Institute reported an unexpected increase in weekly crude oil stock by 0.483 million, though it's not that much anyways compared to what they have been churning out in the last couple of weeks, though it was also in contrast to the anticipated decline of 2.4 million. And usually whenever whenever they have this high stockpile, when they have a positive stockpile, it usually gives us a sign, a reflection of a high supply in market. And when there is high supply, prices always drop. And we also heard about the project completed by the Canadian government yesterday too as well. So all of these things are also supporting a supply of this asset. So we are really in a limbo right now. But today we are looking forward to the Energy Information Administration report, which is scheduled for later today, and everyone in the market will be looking forward to that report for an insight or for fresh impetus in this particular market. So with all the information we have gathered here, you will see that we are at a crucial juncture as usual, and it requires that we exercise a lot of patience, waiting for significant confirmations before we jump into any positions on this asset. Now, looking at things from a technical standpoint right here on the 1 hour time frame, how do we intend to position ourselves for the next move? Of course, that's the big question right now. Looking at the structure on the 1 hour time frame, and for those who are joining us for the first time, we only deliberate on the 1 hour time frame during the Forex Morning Mastery because of the short space of time we have. But I already did a top-down analysis on this asset at the beginning of the week. If you in any way missed out on it, you can check the link in the description box of this current video you are watching to see this analysis, so you can have an idea of how we got to the current point we are on the 1 hour time frame. So technically speaking, and looking at the structure, remember that at the beginning of the week we had this beautifully identified descending trend line, which of course had played a major role in determining the direction of price action since the beginning of this week. And yesterday we saw price breaking out of that structure after a little bit of let me call it a reversal pattern around this area, where the neckline of that reversal pattern is sitting exactly at the $71.40 area, which interestingly shares a confluence with that descending trend line. Now, with the breakout of this structure, technically we do expect that price may still come back to retest the structure that was broken in anticipation of another wave of bullish momentum. So let's keep an open mind here as sellers could still come in to push price to the downside, especially if we consider the fact that this area around the $73 area has been a strong selling niche since the beginning of this week. You can see right here on Monday, look at how selling pressure persists here as we saw every attempt by the buyers to break out of that structure failed at every point in time, and of course we saw another one here which led to our first loss for this week as well. And right now price is back into the structure, and in the last 3 hours we've seen how buyers continue to struggle around that area. Now if the selling pressure persists, we may see price do a retest of structure, that is of this descending trend line, maybe to incite another wave of bullish momentum. Now our center of focus for today is going to be around that $73 area. Let me zoom right in so we can see what is going on right here. So this is where our center of focus will be. We already have a buy position triggered here already, and if the momentum continues, we have another buy stop above the $73.50 level to capitalize on the uptrend move. However, if price continue to find selling pressure around this area, I'm of the opinion that if price can come down to break the $72.40 level, a level which is known for selling niche at some point this week, as you will see, we had this sell pressure around this area at some point, and this area here was a demand zone. So if price can break down the structure today, we might likely be seeing opportunities to sell from that area. So our center of focus for today's trading session is just between the $73 area and of course the $72.40 level. Depending on what happens here will determine what our next line of action will be. Now if a breakdown of the $72.40 area happens and price continues to drop to the downside, remember we talked about this trend line here, so as soon as price gets into that area around the $71.40 level and the trend line, let's ensure we move all stop losses, secure the sell positions while we exercise patience and wait to see how the market will be reacting to the structure to decide if we are going to be adding more sell positions or getting ready to buy. And we are only going to be buying at the emergence of a reversal setup, buying the breakout of the neckline of that structure. So this is what we will be looking at today to guide our trading decision. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on this asset. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. So you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Hello guys, if you have found this content helpful and useful, please, I will encourage you to click on the like button. Please give the video a thumbs up. Your likes are very, very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial to them too. And thank you very much as you do so. And for those who had already clicked on the like button, you guys are just wonderful. Thank you very much for your support. So with that being said, and in the absence of no further questions, I do want to assume that we are all on the same page, and that we shall be moving on to the next asset on our watch list for today. So the next asset on our watch list for today is the USDJPY, an asset which we started trading this week after a 4 to 5 month break, after I told us 5 months ago that the uncertainty surrounding the exact time that the Bank of Japan will be intervening in the market was not conclusive, and as a result of this we saw a very strong choppy situation in this market. So we decided to stop trading that asset, and then we took on the GBP USD instead. Now this week we started I decided to reintroduce this into our watch list due to interesting trading setup which I did identify during the course of the weekend. And of course, the beginning of the week, the week has been very, very profitable for us all, as we so far this week have scooped in a minimum of 800 pips, taking advantage of multiple buying entries on this particular asset. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby and of course trusting in our analytical process. Now, for those of you who missed out, let's quickly run through how the week started for us all in this community on the USDJPY and what we saw that made us to buy this asset. So at the beginning of the week, remember we had our key level situated at the 144.800 area. And of course, you know how we use our key levels in this community. As long as price action remains above our key level, we want to be looking out for patterns and structures that supports the idea of buying. Now, for those of you who are yet to watch my weekend video on the USDJPY, I recommend that you watch them so you will have a better understanding into how we were able to identify this key level we used to guide our trading decisions for this week. Now, with price action sitting above our key level, we were definitely looking out for buying opportunities. And to make things simple for us, we had a beautiful range identified, as we saw price action confined within the 145.240 and the 144.870 for the first 10 to 12 hours of the week, giving us an indecisive phase. And of course, we want to wait to see price action either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And then at no point in time did we see price come even close to the support line, let alone considering selling this asset at all, as it was more of price finding higher highs and higher lows. So we had the privilege of joining the bullish momentum at the breakout of the structure. Then we had multiple levels identified. We had one at the 145.550 where we had the buy stop order above the structure. We also had another one at the 145.800. We also had more at the 146.450. This was on Tuesday's trading session, and yesterday we also had one more at the breakout of the 147.400. And during the New York session, I think a couple of hours into the New York session yesterday, we also had another one at the breakout of the 148.200 level. So it was a very phenomenal week for everyone in this community, and you know that we moved our stop losses as soon as price moved very well. And if you moved your stop losses accordingly, you must have been taken out with a reasonable amount of profit on this particular asset, a minimum of 800 pips, and you could have as well had up to 1,000 depending on how many buy entries you had on this asset. And once again, congratulations to everyone who capitalized on this trading opportunity. Now, as it is right now, how do we intend to position ourselves for the next move? Is price going to continue to the upside, or are there chances that sellers could come in at any point in time? Well, technically, if we look at the structure, this is where our center of focus will be. And in fact, those two ascending trend line is going to be playing a major role in guiding our trading decisions for today. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to continue to look out for patterns and structures that supports the idea of buying this asset. Though we have price breaking down the first ascending trend line right here, we have this trend line broken to the downside, but since the second trend line still remains very much intact, we're still going to maintain a strong bullish bias on this asset. Now, the question we want to be asking right now is, when are we going to buy? Where are we going to buy? That's the next question we want to be asking. But we cannot answer that question without taking some insight into the fundamental factors behind the scenes. Now, like I said earlier, for those who are with me on both my TradingView and Telegram platform, I did give a detailed analysis on that regard. And one of the things I said this morning is that the selling pressure we witnessed since the later part of the New York session yesterday may be attributed to profit-taking activities from those market participants who had actually bought at that early stage during the beginning of the week. And at a point, after taking a significant amount of profit, market participants will tend to want to start taking some profits off the market, which will reflect on the chart as a retracement move that we are seeing right now. Expectations of the Bank of Japan maintaining its dovish stance in January continues to weigh in on the Japanese yen, and if this dovish stance continues, the chances that price will continue to rise is very, very high. And of course, we know of the reduced bets for a March Fed rate cut, and of course the elevated US Treasury bond yield is not helping matters for the Japanese yen at all. So the yen is facing challenges right now, given the growing consensus that the Bank of Japan will not abandon its negative interest rate. So at this point in time, I still think price will continue to rise to the upside here. Additionally, the recent widening, the differential difference between the rate of the US dollar and the Japanese yen as well is also an attractive window for investors. Remember, the interest rate for the Japanese yen is pegged at minus 0.1%. It's a deficit, and the US dollars rate, I think, is 5.25 or 5.5. So just buying the dollar with your yen alone is making you about 4 point something plus percent return in investment. So it's still a very attractive window for the US dollar, especially if the Japanese continue to hold on to their ultra loose monetary policy at this point. Now, looking at things from a technical standpoint, where and how are we going to continue the uptrend? Now that price action has dropped into this area, let me bring out my line chart here. There is a level which is peculiar with the current structure right now, and that is around the 147.700 area. So I would encourage us to mark out this level on our chart right now. So we have the 147.700 level, as you will see right here. And if I bring back my candle chart, you will see how this area has been a strong demand zone in the last 24 hours. The last bullish momentum started from this area, and right now price action has retraced back into that particular structure. And as soon as price tested this level about 3 hours ago, we have been noticing buy pressure around this area, and the fact that price still remains above this other ascending trend line makes everything suitable to continue looking out for buying opportunity. And one thing I would like to state here is that the retracement could still drop below the 147 and then probably come into this area where continued buy pressure around this area, or any form of reversal pattern, maybe a double top, inverse head and shoulder, or even a falling wedge. Just mark out your neckline and then buy the breakout retest of the neckline to join the uptrend continuation to the upside. However, as it is right now, and considering the series of lower highs in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 hours. The next thing we usually do when we find series of lower highs like this is to mark out this trend line and then use it as a yardstick to guide our trading decisions for today. Now, if price at any point in time breaks out of this trend line, we definitely want to be part of an uptrend continuation, having our stop losses sitting somewhere or around that ascending trend line highlighted with the red color on your screen right now. And if you look at this trend line here, we should be having a level somewhere around the 147.950 area, which lines up with that descending trend line. So we have the 147.950. If price can break out and retest the structure, we look out for buying opportunity. And for those of us who are already profitable on this asset, we can easily place a buy stop order above the 147.950 and have your stop losses, a wide one of course, below the descending trend line. That will be dovetailing to about 35 to 40 pips thereabout, to ensure that we mitigate against any risk of a sudden pullback to the downside. And of course had more positions as price action continues to climb the 148.200 area. We had more positions there, and if price can break out the highest point for this week at the 148.500 area, we shall continue to maximize the potential of this bullish move. So that is how we're going to be managing our trade, our bullish opportunity on this asset today. However, if price action goes on to break down this ascending trend line, which interestingly shares a confluence with the 147.700 area, beautiful confluence we have here, price breaks down the structure, we might be getting ready to sell, but I would like to see some confirmations like a retest of structure on my lower time frame to join the decline to the downside. And if price continues to go down, break down the 147.4, we shall be adding more positions to our existing trade. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the USDJPY for today, as our center of focus right now is going to be between the 147.950 and the 147.700, which will be determining where and when we will be buying or selling this particular asset today. So I encourage us to mark out this level and let's see how the market is going to play out going forward. If you have any questions whatsoever as regards to this current setup, or as regards to my explanation, or probably you need some clarification whatsoever at some point, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the last and final asset on our watch list for today. All right, I see a couple of comments right now. One from Fred. Good morning, Fred. Glad to have you around with us this morning. And I see another one from Maid on Hearth. Good morning to you, Maid on Hearth. Trust you are doing very well. And you are asking here that are we not trading the GBP USD anymore? Well, I know that we have some GBP USD fans out there, and we will be wondering why we are not looking at this. And like I said earlier, we had to swap the GBP USD for the USDJPY simply because of the interesting setup I saw on the USDJPY during the course of the weekend. Normally, we have been trading the USOILSPOT, the US Tech 100, and the USDJPY until the month of September, October, when we begin to notice the uncertainties that grip the market of the bank of the USDJPY, and we decided to stop trading it for a while just to allow the market to normalize, and instead we adopted the GBP USD into our watch list. So right now we have new opportunities on the USDJPY, which looks more promising than the GBP USD. That is why I included the USDJPY on our watch list for this week. So I'm very sorry about this, and it's because of my time. I can only take 3 assets during the Forex Morning Mastery, and that is why we are only doing those 3 assets. So for now, please bear with me. We are not taking JPUSD, at least for now. Maybe next week, if I see something very interesting which looks more promising than the USDJPY, we could add it to our watch list one more time. I do hope I answered your question made on half, and I'm glad to see that we have JPUSD fans in the house too as well. All right, so in the absence of no further questions, I want to assume we are on the same page. And please, guys, we have over 17 people on the stream. Please click on the like button, please. It doesn't cost anything. This is the cheapest way you can actually support this channel. If you have found this session useful and content useful in making your independent trading decisions, kindly give the channel a support by clicking on the like button. Thank you very much, and I really do appreciate as you do so. So in the absence of no further questions, let's move right into the last asset on our watch list for today. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, we've had a tremendous week, if you would ask me, as we have been selling this asset since the beginning of this week, since the breakdown of that support line had a $2,053 area right here on Tuesday's trading session. And since then, we have capitalized on multiple entries, added more positions at the breakdown of the 2046. We also added one more, had a breakdown of the 2035, our key level for this week. And we also added one more, had the breakdown of the structure. And during our live session, after our live session, I think a couple of hours after our live session, we had the privilege of joining a buy position which did not do well at all, and of course that went into a stop loss as we saw price continue to the downside. And for those of you who are part of the XAUUSD live window during the New York session yesterday, we did identify a simple setup on the 15 minutes time frame that supported trading opportunities, and that's the buy position failed, but we saw price drop to the downside. And we also captured some selling opportunities yesterday as we rode the momentum all the way into that area around the 2006 and the $2002 area. And for those of you who capitalize on all these opportunities since the beginning of the week, well done, and kudos to you for being on standby. Though we had some losses, but we were able to make a significant amount of profit that overshadowed these losses we had. And that is why it is always important that you stay committed to whatever approach you have. Just be consistent with it. Remember what happened last week on the XAUUSD, where we had our 2035 level, an area we were looking out for buying opportunity. And of course, we had 3 setbacks during last week trading session, buying at every point in time price broke out of the 2035 level. And until the final trading day, when we saw price break out again, we bought again, and then we were able to recoup all the losses we made throughout the course of the week and made some small profit on top of it. So it's always reasonable that we stay consistent with whatever approach we have. So right now we are at a crucial juncture in the market right now, as we can see how throughout the Asian session we saw some deep buying around that 2006 and 2002 area, which for me, I think we are seeing signs of some sort of recovery on this asset as buy pressure continue to push around this area, and of course signs that sellers were finding it difficult to break through that area. Now, despite the strong bearish momentum since the beginning of the week, which is characterized by this descending trend line we marked here. Remember, this is our descending trend line for this week, which of course emphasize the continued strength of the sellers in this market. And you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we continue to look out for patterns and structures that support the idea of selling that asset. But as it is right now, in the last 4 hours, we've seen price break out of that descending trend line after the inability of sellers to break through this 2006 and 2002 area. Now, I'm beginning to see potentials that buyers may come in after the breakout of the descending trend line. We may still see price come back, retest the trend line that was broken to incite an uptrend continuation. Things are looking very bullish for me at this point in time, and this could be the beginning of some profit-taking activities, as those who bought the US dollar, sold the gold in that regard, might want to start scooping in some of their profit, closing in some of their position. And if they start doing this, we are likely going to see price break out of the $2013.50 level to push price to the upside. And with the persistent attack in the Red Sea and concerns about Chinese economic outlook, it may influence the market sentiment, providing a support for safe haven assets such as the gold. While a modest downturn in the US dollar contributes to gold's resilience, profit-taking activity, like I said earlier, could incite a momentum to the upside, and the market appears to be digesting reduced expectations for an early Federal Reserve interest rate cut following positive U.S. retail sales data figures that came in yesterday and pointing at a robust U.S. economy. The figures was phenomenal yesterday. It came in beyond expectation, further emphasizing how resilient the U.S. economy is. And of course, this also has elevated the U.S. Treasury bond yield. And of course, we do know how the U.S. Treasury bond yield and the U.S. dollar move hand in hand. If the U.S. Treasury bond yield rises, of course, the U.S. dollar will rise. And if it drops, the U.S. dollar will do the same too as well. Now, looking ahead, if you look at the current structure right now, in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 18 hours, you'll see that price has been consolidating, trapped within this range, and give further emphasizing the level of indecision, as we do not know right now if price will continue to the downside, or there are chances that buyers may come in to push price to the upside. So we are in a limbo right now. A level of uncertainty has gripped this market, and I'm of the opinion that this is happening as a result of the anticipation of the mid-tier data we are looking forward today, which comes in the form of the Philadelphia Fed Manufacturing Index. We talked about that earlier, and the housing market data, and of course the initial US job claims also, which are all coming up later during the New York session today. So I think market participants are holding on, waiting for fresh impetus from this event. So we are also going to exercise patience at this particular point in time. And of course, you know how we treat our ranges in this community. When we have such, we exercise patience and wait for price to either break out of the resistant line for buying opportunity, or break down the support line for selling opportunity. And like I said, technically, price remains above the ascending trend line. We'll continue to look out for buying opportunities here, and if price continues to climb and find new highs, we have multiple levels here. We have the $2013.50 level, we have the $2022 area, and of course we have our key level at the 2035. If price break out the structure, we want to be maximizing the potential of this bullish move. Now, in as much as the potential of a bullish idea is on the table, we cannot ignore the potentials that sellers could also come in. The week has been very bearish, of course. In fact, since the beginning of the year, price had consistently and uniformly found lower highs in this market, giving us beautiful descending trend lines to guide our trading decisions. So if price can drop back below this descending trend line, definitely we'll have no other choice than to look out for selling opportunities, as price would have taken out all the buy positions within the 2006 and the $2002 area to emphasize the strength of the sellers at this juncture. So for today's trading session, our center of focus is going to be between the $2013.50 level and the $2006 area, where depending on the direction of this breakout will give us an idea of where price is likely going for today. So I encourage us all to be on standby, mark out these levels, and let's exercise patience for the structures to mature before we jump into any positions today. And for those of you who are joining us for the first time, the XAUUSD live window is a platform where you have the opportunity of seeing in real time how we manage our positions on the XAUUSD, especially during the New York session. So I already have the link in the description box, in the comment box. I don't know why YouTube has stopped the pinning of links above the comment box, but just look for my name in the comment section. You will see the link right there. Click on the link, click on the notify me button so that you get notified as soon as we come on live. So that is that for today on the Forex Morning Mastery, and it has been a wonderful moment with you guys. If you have any questions, feel free to let me know in the comment section. So while I wait for your comment section, please click on the like button, support this channel, support this project, and let's allow this community to grow. And thank you very much as you do so. So while I wait for your feedbacks, let's see some likes, and I will be back in a moment. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. Thank you very much for your likes. I really do appreciate it. Thank you very much. I can see your comment here made on Hearth. Do you think it's okay to only trade one pair? That's a very beautiful question. Is it okay for you to trade one pair? Well, this is my response here is a personal opinion, and this is something that has worked for me for a while now. And I usually, if you also follow my daily trading tip, you will see that I usually emphasize the need for you to expose your risk, to reduce your risk exposure. And the only way you can reduce your risk exposure is by making sure you have positions in other assets as well, just in case this particular asset you're trading is not doing very well. You can have the other assets to recuperate on your portfolio in that regard. So if you look at me, I have a handful of assets I work on. If you've been following my channel for a while now, I usually trade the GBP USD, the USDJPY, US Tech 100, XAUUSD, of course my favorite, and of course the USOILSPOT. So I don't go out of these boundaries of 5 financial assets on my watch list. So I usually share my risk amongst all these assets and then trade them, follow my strategy consistently. So for me, if you would ask me, I think the most advisable and reasonable way to be consistent in this market is to ensure that you diversify your portfolio using other sectors. For me now, I have the oil sector, the energy sector, the commodity sector, which is the gold, and then the currency sector, which is the GBP USD and the USDJPY. So just look for things that work for you. Look at markets environment that is in alignment with your trading approach. Adopt them. You can start with 2 or 3 assets, and then if you can expand further after a consistent, a well-defined analytical approach, then you can extend it further. But for now, you can do 2 or 3. That is my own opinion anyways. It's better you reduce your risk exposure. Don't put all your eggs in one basket. Spread them just in case one is not doing well. At least the other will be doing well. So That is that. And while you're doing this, it's always important that you have a well-defined risk management strategy. It's very, very important. And if you ask me, I am a passive trader, and I don't risk more than 0.5% to 1% of my account size on every of the trades I usually take. So if I get a loss on that one, it doesn't really bother me that much. So you want to look for a balance there. Look for something that lines up with your emotion. If you lose it, can your emotions handle it? When you begin to risk like 10%, 5% of your account size, you realize that you are not in your right senses when you take a trade. So this is my own fair opinion. I hope it makes quite a lot of sense. If you have any question made on that, please feel free to let me know in the comment section. So with that being said here, and in the absence of no further questions, it has been a wonderful moment with you guys today. I really enjoyed every single moment. I love the energy in the house, and glad to have you guys around with us this morning. So today we were able to look at 3 major assets which is on our watch list for this week, which includes the USOILSPOT, the the USDJPY, and of course the XAUUSD, all of which we were able to identify simple trading setup using our basic tools such as trend lines, key levels, and of course chart patterns only to identify potential trading opportunity and strategically position ourselves for the next move. And I hope you all marked out these levels as we illustrated during the Forex Morning Mastery session. If you do, please, I encourage you to exercise patience and allow the structures to mature before jumping into any position. And it's on this note I would like to wish us all the best of luck. And for those of you who are joining us for the first time, I do hope you are able to get 1 or 2 things from what we discussed here today. And if you do, you want to be part of our subsequent edition, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to enhance your own trading decision. And I look forward to seeing you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and at the same time prepare ourselves for the last trading day of the week, which promises to be another exciting one. See you all in the comment section of both my TradingView and Telegram platform, and of course during the XAUUSD live session as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.